The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien, Tommy O'Brien, and Darrell Martin.
Welcome, folks. Tom O'Brien, Tommy O'Brien. We do appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials down 43. Nasdaq is up 2. S&Ps are off 3.5. We have the gold contract down 480. We have silver off 12 cents. The oil market's down 62. Bonds, the 10-year note up 1. The 30-year bond off 21. Good old King Dollar up 637 ticks. And folks, if you haven't test drove the Nadex product, come over to our website at TFNN. You're going to be able to hit the banner on the top or the side. Bring the exchange up. We'll walk you through how these contracts work. They're defined option contracts. They'll put $25,000 of paper money into your account, and you'll see that basically your trade most of the time is your stop, which is a beautiful thing.
Well, depending how. I wouldn't say most of the time, actually, because that's how you're trading it is.
Yeah, right. It doesn't have to be.
It doesn't have to be. That's, that's because you're making trades where you're risking like 1 to make 3. You're paying premium. A lot of people do it the other way, and just to keep.
And so let's talk a little bit about. There was something unique that happened. Last night. Yeah,
you got my brain running on it, and that's even what I wrote a little bit, just kind of what you were talking about in one of those Nadex pieces. I just highlighted it, and I just pulled up gold. And,
and so
I hadn't even looked at gold since I wrote it like last night. I was actually listening to your Market Insights workshop, and that's when I was taking a peek at it then, and so. I hadn't looked at gold since last night, though. I'd been there, and then so.
Isn't that cool?
It would have looked great last night, and thankfully I hadn't looked at it, though, because then it would have looked rough this morning, right?
Yeah, well, it's still here. I'm going to walk you through this for a second. We need to see what risk.
Yeah, they don't even know what we're talking about.
Risk, risk versus the reward, folks. Okay, so check this out. I'm getting ready for my workshop last night, and.
Yeah, so this is about 6 o'clock last night.
And what happens is that coming across the tape. It was released at 5:20 or 5:30 that Janet Yellen had written a letter to one of the congressmen.
Yes, and it was in response to when she was testifying. They can ask her questions to further examine, so this is one of the letters following up on what she had said.
And what it was is that she was talking about she wouldn't rule out negative interest rates, right?
Yeah. They probably asked her to clarify that position or something like that. That's what I'm guessing prompted. Yeah. Because she had mentioned it, and I have to dig into it more, but I was even talking to one of my friends about it. She had mentioned something about it, or they had talked about it, at least during that hearing. Right. So,
I'm sitting there saying to myself, oh, my God.
It's a big headline, though. It is.
I got to run to Nadex quickly here, right? So I run to Nadex. And at that particular point, right now, folks, I'm still just flat, okay? Yeah. I haven't made any money.
It was about, I remember, 1266.50 or something.
Because I didn't take it off the table. But the bottom line is that, so I put a couple contracts on, and the really cool thing is that, I could sleep with them overnight.
Yeah, right, because the way you're trading it, your risk is your stop.
It is.
Right.
It is. Right. And so bottom line is that even when I woke up this morning, I was up like $300 this morning.
Now,
it ran all the way to 1277. It's run there twice.
Sure. Do you want to look at what contract? $300 means nothing unless we're talking about per contract, right?
Yeah.
That's just so people understand.
I think I traded 100. Was it 300 contract? I think I risked like 250 a contract. No, maybe 200 a contract.
Let's pull it up. So you have 2 contracts.
Yeah.
You basically read it. So yeah, you were at about 175 per contract.
Okay, right.
And that would be so the floor is 1250. All right, you're in at 67.70.
Right.
So 177.70.
Okay.
Right.
Yes.
Yeah. $17.70, and every dollar is $10 in your contract.
Yes, it is.
Right.
Exactly.
Right. So, yeah, you had a lot of room still to the upside. I mean, you'd basically just come into the middle of that spread. Is 1275 right here.
The thing that does get interesting is that when you look at percentage-wise, if I had taken it off at that high, I almost would have made 100%.
Yeah.
You know.
Right. That's why I was like, when you say it was only $300, that's almost a meaningless. I know. I give him a lot of grief on the way he talks about that because it's a meaningless number.
Right.
Another way of saying that is I was up 100%. And you see how one's like I was up nothing. One's like, oh my God, I crushed it, and they're both the same exact thing.
Right.
So. You know, you were up, about 175 for a contract, and you're risking 175 per contract. But the other side of that is that, you were still bullish, and guess what? You still had a lot of profit, and you still had a lot to the upside. As in, it wasn't one of those deals where we talk about where you have, you're risking almost 10 to make 1 at the end.
Right.
It wasn't one of those where you still had a lot of room to the upside. So, yes, you had money at risk, but at least there was that other side of potential reward.
That's right.
And what we talk about when you want to take it off the table is when you're risking like 10 to make 1 when you initially maybe made a trade where you're risking 1 to make 3, right? And then so you get it all in your favor. Are you really want to risk 18 to give back 2 or to make that 2?
And that's when you get too close to the end of the
and that's not what this was. So
it's
fine that you kept it,
So now let's look at the market in general. So
and like you said, it's a 1:30, so you still have over 3 hours until.
Oh yeah, and I like
And what happened? Was there news? Was there
payroll? Well, it's really funny. The retail numbers come out.
The retail numbers. That's what it was.
So picture the retail numbers are actually
big.
Yeah, they were big. I
saw the headlines.
And so it must be all. I
had to do a double take too because I was like, wait, all the news has been retails, Macy's, all that.
That's going to be. It's about cars. Everyone's buying cars. Okay. And bottom line, it's probably
we re-upped our lease recently.
Exactly, and it's probably about Amazon too, because Amazon's probably in retail sales, even though we don't think. You know what I'm saying?
We'll have to figure that out. I'm sure that's an easy one to figure out whether Amazon's in those numbers that just came out.
Right.
Yeah.
You stay right there, folks. Tommy and I are coming right back. Retail's cars and Amazon. Yeah. Well.
Yeah.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is down 28. You get the Nasdaq up 7. S&Ps are flat. And so if we let's take a look at the Nasdaq. All right, the spreads. So, because I like what the NQs are doing right now. And see, what you also have happen here is this. Here, let me show you this first, folks. Okay. So picture yesterday, we rejected lower price, had just slightly lighter volume, just slightly. Now, if you go over to Europe right now, what you're going to see is that Europe had done the same thing yesterday. And the difference was that they closed at their lows. Okay, so the DAX yesterday did 103 million shares. That was going into 89. Okay, and that closed at its lows. This morning, what does it do? It opens. Now, watch this. This is pretty cool, especially on a Friday, folks. It climbs all day long.
Yeah.
Right? The FTSE is doing the same thing. So my take goes like this. Our market's already rejected lower price yesterday. It wants to be deviant. So my take is that this is going to try to claw its way higher all day. Now, you take the speculation like that, and then, of course, what I'm going to do, I'm going to trade off the volumes. I mean, that's all that's the reality here. So when I look at the NQs, what I'm looking at now is like, okay, man, I like this setup because you have strength when those retail numbers come out. We just backed into the strength with lighter volume.
Was that, okay, the bar you looked at is 9:30, which is the open, though. That's not the retail numbers. Right. Retail numbers were like 8:30, I think.
They were 8:30, yeah, they were 8:30.
Okay,
so that's close.
Okay.
Okay, so that's right.
I just want people...
I'm with you.
Okay.
So 8:30, they come out, we go from a 43.24 to 43.35. You do the next leg up, you pull back with lighter volume. So that's saying to me, number one, it wants to get up to the 43.56, which is $10. The real kicker is that if I go against that bar right there, which is 13,000 contracts, the lows.
Which is the open from yesterday, just to put it real simply.
Open from yesterday, 13,000 contracts, and I'm going to 15,000. I like that. Well, I might like that setup in the Nadex platform. We'll find out. So 43.40.
Why don't you just blow that up as you? It's always easier if you're dealing with one screen.
Okay, so interesting. The 80-point spread is right in the middle.
Yeah.
So
that would make sense because the market is pretty flat right now, right? It's close. It's within 5 points or so.
Right.
Yeah, so you have a lot of options pretty close to basically the middle of the spread, and you also have, basically 40-point spreads where the ceiling, the floor is going to be kind of where we're trading at.
Oh, that's interesting, isn't
Or
it?
you could do it, they're both. Because we're right at the center, you have the other way. If you're going short, the ceiling would be right where we're at. You know? So it's a good setup in terms of...
What's the 40-point spread? Let me see that one. So I'd be risking, what, $100 to make 300 or 120 to make 135?
So this is where you're risking a lot. You're risking...
That's too much.
You're risking 25% of the value of the spread, too.
Right.
Which
That's
is,
too much.
It's like people get caught when I think, first look at this, you say, I expect a big move. 8 to 10 points in the NASDAQ's not a big deal.
Right.
But you have to remember, you're paying $8 to $10 in premium with a capped upside of only 40 points total.
Right.
So you better be making the full value of that spread often enough to be paying that 10 points in premium.
So here, let's go to the 10 to 12 spreads, okay? Because that's the full day. So the 10 to 12 spreads.
10 to 12 a.m. as in 10 to noon. Yep.
Yeah.
Now these are only 10 points.
Right.
Yeah. They're going to be $100 for the full value, for the pie. So same thing whether, right here, 43.40 to 43.50. That's where you're going to be paying about, 1.8 points in premium.
Okay.
And it's pretty close to the center right now.
Yeah, see, and that's something you can trade. I kind of like that one. Let's go back to the market for a second.
Sure.
Yeah, so That's not a bad setup. You'd spike to the top of that setup was 50, right? Yeah. So you're looking for I'm looking for 56. Let me just go look at the E-minis for a second. So the E-minis. Oh, that's interesting. Now, to me, you see, the E-minis aren't ready yet, so it's like I gotta hang tough here for a second.
Can you explain that?
Yeah. So what happened with the E-minis is that when we came back, the NQs came back with dramatically lighter volume, right? You can see that the E-minis didn't.
Okay.
The E-minis came back. Let me get it closer, and you'll see that that's around the same amount of volume. And I don't, you know, it's like, okay, 52,000 contracts.
Yeah.
It's 85, 81. No, it's pretty good too. But I don't. When I gauge it at something like this and I have to think, it's like, no, that's too much. You know what I'm saying? Even though the correlation.
Yeah.
Where if you go over to the E-mini, the Nasdaq for a second. See, the Nasdaq to me is a cleaner picture.
It seems like that the opening bar on the Nasdaq is always much bigger, though.
Oh, it is. No,
than the S&P. I mean, that's just always going to be the case. I think where the S&P opening bar isn't going to be as staggering as it seems like the Nasdaq opening bar is when we're always looking at it. Nasdaq 100, as in the opening volume on the Nasdaq 100 is always a big.
Yeah, I've never matched them like that, so I'm really not sure. But the let's go to the dollar for a second, because gold is holding pretty good here for the dollar being up 500 ticks. So we get gold at the 1262. Right there. So the last down, I have to get through this last down spike, because that last down spike had a little volume too at 1264. Our phone number is 877-927-6648. Let me go look at some of the higher volume stocks out here and see what we have happen. J.C. Penney come out with numbers too. That's getting killed too. So you got look at Nostrum. Nostrum's down $6, Tommy. You get Nostrum down 6.35. We have let's see, U.S. Steel's down 75 cents. Nvidia is breaking highs. That's up 3.36. Some of the Dow stocks out here. You get Exxon down 45. We got DuPont off 53. Big Mac is down 34. Amazon, if we go over to the NDX, Amazon's down $4, still up there at $712. Apple's got a dead cat bounce going. So check this out. Did you see what Apple's investing $1 billion, folks, in the Uber of China.
Yeah.
It's pretty funny that they still can't get a bid. You know?
Well, they're up over 1% today, almost, right? I mean, it's a market cap appreciation of billions and billions and billions of dollars. I'm just putting things in perspective.
Wow.
Company's worth billions and millions and millions more than it was yesterday.
By investing $1 billion.
Yeah.
Stay right there, folks. We're coming right back. Right now, we get the Dow down 37. Nasdaq is up 3. S&Ps are down 2. We're going to be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you can earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member, FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is down 51. You get the Nasdaq off 1. S&Ps are off 4.5. Let's go to Jim in Minneapolis. Hey, Jim, what's going on?
Hey, Tom, how are you?
Doing great, man. Yourself?
Well, we just got word we're going to get our first Dunkin' Donuts in Minneapolis.
Seriously?
Yeah, I just saw they signed a lease, and they're going to ramp up. And I've never been to one, but I hear good things about them.
That's funny. Yeah, we're going to have to get Duncan Steve and you on the phone. He'll get you brainwashed good time. That's wild.
Well, I bought this SRS, with all these retailers getting slammed.
Yes.
What's your thoughts on
Let's take a look at it. So
Simon's getting hit today, I see.
Yeah, there's no doubt. If we go over to Simon's first. So Simon's, folks, is the biggest retailer, biggest own mall owner in the world, well, in the United States. And this baby in 4 days has just gone from $214 down to $195 with volume, broken swing points, all of the above. Now, when you look at this in a long-term chart, where do you see this, folks? Okay, this stock went from $22, up to this 200 mark. So the SRS is I believe it's the 200% pro share, inverse.
Yeah, double short.
Yeah, we remember this well, right, Jim?
Yeah.
And if you want to see something that's bizarre, folks, I got to show you this. In the 2007 crash, all right, I was trading this a lot, and this was the sickest equity in the double space that you've ever seen. So this is split adjusted, but when you look at it, it looks like it was from $3,600 to $16,000, but it really wasn't, folks. It's just been split adjusted so many times. But what this equity did do is that we all got a lesson on, how these things are volatile and they're amazing. Well, anyway, meaning because when the real estate industry crashed, this thing went to the moon. So I like what it looks like. So this is the 200% inverse correlation, folks, of the Dow Jones Real Estate Index. And the thing that's amazing, what's so wild here too, Jim, is that this used to be one of the most liquid ETFs out there then. Yep. And now you can see that you only do 58,000 shares. It was doing millions then. Doesn't mean it'll pump up though. I mean, if this this pulls back a little, it'll pump up. Now you're going to get some resistance at what? 30. Well, I can't. Right, kind of where you are. 38.95. It's going to make it over that area. Do you know what I mean?
Yep.
So inside of this, let me see. This I used to have a
IYR is the single time.
Right. And
or long side, I should say.
Yeah, and this, what you're looking at right here, this goes back to 2007, so I'd have to change this again, I think. But if we go to the IYR and take a look at, okay, so here we go with the weightings. You get Simon is 7%, American Tower is 4.9. Now, American Tower, folks, what that is that's just all cell phone towers. Well, they're towers that they rent to basically cell phone companies. Public Storage is number 3. Crown Castle, that's interesting because Crown Castle, that's Hawaii. That's a REIT now, but that used to be the whole big pineapple plantation on one of the islands. That's a private island. Avalon Bay, that's I don't know if that's over 55 housing. Equity Residential's a monster. I'm not sure who Welltower is. Prologix is a warehouse company. Then you have Weyerhaeuser, which is a lumber company, interesting, in Equinox. So Simon's the big one, man. I think you get. I like the trade,
Yeah. I'm not.
Now, if we go back over to IYR as to where it can go, you can see the it's not broken down yet, so I'd just be careful at this. You're at 78, so 77.22, Jim, to 75. That had quite a bit of volume there, man.
Gotcha.
And I think what's going to happen. Just so would you want to wrap your head around here too in this industry here, is that because money's so cheap, if money stays cheap, even though they're going to lose tenants, they can make a lot of money. That's the other side of that. Do you know what I mean? Because they're leveraging. If you're leveraging nothing, you can basically make quite a bit of money. So it's going to, have to do with those box stores will go out. The question is what's going to come back in. Do you know what I mean?
Yeah, no question.
Dunkin' Donuts.
Dunkin' Donuts, yeah, they're coming in fast and furious. So that should be fun. All right, well, you guys have an awesome weekend, and we'll talk to you next week.
Awesome, man. You too. Have a great one, man.
Thanks.
Have a safe one. We got a question in the den. Tom, do you think the smaller malls will go out of business while the big boys will survive as the new generation of buys more and more in time? Yeah, I was thinking about this. It seems, just from personal experience, like where we are here, it looks to me like some of these smaller malls that are high-end we're going to do more business because it seems like they have restaurants around them, you walk around and all that versus, and I'm talking a city mall, I'm talking an in-city mall now, folks, okay? Because down at St. Pete, they just opened a beautiful one. And this is one that had gone bankrupt 10 years ago, you know? Yeah. But now it's great. But what the difference is, you go shopping, you get something to eat, you're strolling along versus just getting in your car, going to a mall in general, So there's no doubt that, let's go to JCP. It's not that bad. JCPenney's already got killed. So, that's a stock that got killed earlier. So they're probably saying to everyone else now, see, it wasn't just us. It wasn't just us, our management. We just happened to get hit first.
Yeah. And that's a different deal, though, JCPenney, because they're such a low-cost retailer. Right? Where they're even taking... Are they taking other surpluses from other...
I don't know.
I just mean they're not the stereotypical, like they had a lot, that decline had a lot to do with them hiring the Apple guy, remember, that came in and
That's
did
right.
away with all their sales.
They stopped the
that
sales.
has nothing to do with the economy,
That was a big deal.
Yeah, so that was just a way they were trying to revamp that company.
And made a mistake.
Yeah, and it's because they're just such a different, they're not a competitor with Macy's, you know, in terms of that's where they're a different retailer.
Because Macy's runs under a lot of different names, you know. Let's see.
Tell me. No, I don't.
Yeah, it's just not. It's not.
I mean,
it's.
You mean what they sell within their own store that is their own?
Well, no, we can pull them up. Like, I believe that we go to all these other stores.
Okay, what they own.
Yeah, exactly.
Okay.
The stores that we know,
Sure.
these big department stores, that the Macy's company owns those also.
Sure. That would make sense if they're the biggest retailer out there.
Right. 877-927-6648, and this. So, let's go back to the NQs for a second.
Sure.
You stay right there, folks. Tommy and I are coming right back. Our phone number is 877-927-6648. Dow's down 47, Nasdaq's off 9, S&P's off 3.5, gold's down 1. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow right now is up 57, and Nasdaq is down 1.5. And let's see, one of the tigers want to look at DDS. This is Dillard's. Okay, so Dillard's is at a low right now. They've already come out with their numbers. The next time they come out with the numbers is August 15th. And we pull this back.
And they're looking to go short, I think.
Yeah, which is good, because it's an ABC down. That's what it looks like. The real question is that, let me put this on a monthly for a second, because this could be an ABC down, the monthly. That's intense. 14 million shares. We're at 7.4. It looks like it's going to be an ABC down the monthly, which would be insane. That'd be 144 to 60. Wow. 40, 88 bucks, right? That brings it to zero. That's crazy. So I'm not going to count on that. That's what happens.
I'm glad to hear that.
Well, it's, yeah.
Well, because they probably have assets worth more than $0.
Yeah, for sure. So now the question is, where does it want to go? I see what's holding it up. So you're at $60.57. What's going to hold that up first is August of 2011. Now, you know what's really weird about August of 2011 is that when we go back to the S&P, I can bring the S&P up. What you're going to see is that August 2011 is a high volume swing low. It's like, man, if the S&P goes back to that, which it very well could, it's going to be pretty intense where the retailers have done it. Let's go to Mike in Dallas. Hey, Mike, what's going on, brother?
Well, how are you all doing today?
Morning, we are doing good, man. Yourself?
Well, doing good.
Cool.
I wanted to ask you, Tom, you had mentioned you looked at you were looking at the volume on the E-mini.
Yes.
And then you were comparing the volume of the E-mini with the
NQs.
NASDAQ,
right.
NQ. Would you go into a little bit more detail on that? And I noticed you did not trade anything.
Right. Because it was of the E-mini. So watch. So when I pulled up, and I do this in the futures market too. I've just,
You want to see everything aligning, right?
I did.
Yeah.
So what happens is that I've traded, the NQs and the ESs quite a bit, right? But when I go in or go out, I like to see them line up the same because they normally do line up the same.
They're both giving you strong signals. That's right.
Right. And
okay,
so
you don't want to see divergence.
I don't.
Okay.
And what I don't want to see, because if you saw what happened there, remember I turned to Tommy and I says, what happens is if I have to think about it, even when I'm looking at a chart, I know there's something wrong. Do you know what I mean?
Right.
If I have to, because I didn't have to think about the NQs, but then I looked at the emails, I said, okay, something's wrong before I even put the cursor over it. So
okay.
That's just...
So you do that as in comparing what kind of spreads you're going to...
That's correct. And I want harmony. Do you know what I mean? Like
sure.
Harmony to me would be that, okay, they're both going the same way.
Yeah.
And
I think I don't think it was as much, Mike, before he goes and looks at the spreads, he just wanted to be strong in his conviction that it was that he was bullish.
Right.
And he just wasn't strong enough with the S&P not having as strong of a signal as the NASDAQ.
A general trend of both markets.
Yes.
Yeah, and that they're both strong and they're both saying the same thing. That's what he was looking for, and it just wasn't strong enough on the S&P to pull the trigger.
Excellent.
Yeah.
Well, thank you all very much, and have a wonderful weekend.
Take care, Mike.
You too, man.
Thank you.
Thanks so much. Yeah, you want that harmony because it's hard enough.
Yeah, and I think every trader knows that, where they have a number of different things they're looking at.
Right.
And everything always doesn't line up, right?
Right.
So you have to make that decision. Does it line up well enough? Is there enough conviction?
Exactly. Exactly. And what is the conviction? Do you know what I mean? Yeah, for sure.
Yeah.
So we'll get now. Watch where my head's going now. So watch where my head's going now, folks. Because of the way that the market traded yesterday, it's like, okay, man, they want to slam this thing. Well, here, let's see if I can find a spot where I think that they want to slam it to, and then let's see. So 2 days. So see, we're pulling back on light volume. So it's like this is the NQs still. Yeah, it doesn't look to me like they want to pull it back that much more in the NQs. The NQs look like where they're going to just base out. But this, what does happen here is that this is an indication that it very well may be time that you take your phone and you take us to the beach with you as you're listening to Basil and swim lessons and hang up the trading for the day.
Sure.
Because this is too flat.
One needs to take the phone. The phone's a computer nowadays.
Yeah.
I thought you were going to say, and you can trade from the beach, but go ahead.
Well, you can, but because of the way the market's shaking out right here, it's like, hold it, man. You know, it's like me keeping my hands in my pocket until I get this higher market to sell.
Sure.
You know, well, we'll see whether we get a higher market, but that's kind of where my head. Yeah. That's definitely where my head's at. If we go over to that gold contract for a second, it's gold caught a little bit. We'll see whether, you know, if it can catch one more. There's not enough volume here thus far, but we just up $3 or $4. What is cool though is that in that Nadex product, it's a couple bucks is a couple bucks.
Sure.
Take the boom box. Yeah, the boom box, man.
Once you close that.
Yeah. This one right here, right? Yeah. So and remember something, folks. If you're trading the commodities inside the Nadex product, remember, just check what time the actual, because the commodities are going to close on the Nadex product when the pit closes. Yeah. Not just electronic trading. And in this case, it's going to be 1:30 that these are going to close out. You know. And what does happen if you're trading in the it's gold, the silver market, get ready for some high volatility when you come into those close many times. It can go both ways, but sometimes it drives me crazy because if you're only up a couple dollars, you can give it back in a second. Right. Now, many times they'll push it, but you do get a lot of pushes at 1:30 into the close. Yeah. And then what ends up happening is that electronic trading takes over, and then of course it keeps going, but it's the close that's important inside the contract because you were talking about a defined contract. So the Dow, let's see what is pushing the Dow down. Walmart. Walmart's the culprit. That's down 2.4%. Caterpillar's 1.7%. Chevron is 1.2%. And DuPont is 0.95%. Let me just go to Walmart for a second. Yeah, she's coming down with volume. Inside the NDX 100, Western Digital is the leader, down 2.4%. Dollar Tree is down 1.7%. Norwegian Cruise Lines, the winner is NVIDIA. Gaming, man, is huge, huh?
Yeah.
That's
those chips.
Big number, man. You stay right there, folks. Tommy and I are coming right back, and of course we're going to have our man, Mr. Basil Chapman, coming up next. Swim lessons, Steve Rhodes, Dave White. We'll be back this afternoon. Stay right there. Tommy and I are coming right back. Dow's down 59. Nasdaq is flat. S&P's are down 4.5.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Darrell Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow right now is down 57. You get the Nasdaq up 1.5. We got the S&Ps down 4. Gold is flat. You know, we'll see whether I can catch a bid coming into 130. And that's pretty impressive with silver being up 600 ticks.
Yeah.
You know?
Yeah.
Let's see if silver's catching a bid. Silver's the one, you know, not
Hold on
that I'm trading silver, but the if silver, it's kind of...
So you were saying before, I think you were going to say, with dollar being up that many ticks, is that what you're saying?
Yeah.
Okay, you were saying with silver being up that many ticks. You were talking about the dollar. You were just saying silver.
Right. No, I had said the dollar first, that gold was still strong with the dollar up that much.
But
and then
you
I
said
shifted...
silver in that, just so you were...
And then I was just shifting to silver.
I know.
That
you were saying silver, though. That's what was confusing.
I see, okay.
Yeah.
So what we're looking for is that... They haven't been able to get it down. Let's see. So you're at 1707. You get the seller at 1710. Yeah, I want to see this get higher. I'd like to see this close like at the 1721 area. The reason being is that, you know, now this is light volume at the lows, but I want to see it get inside that higher range, where gold is inside the higher range. Gold's been stronger. There's no doubt about that. But, you know, so you get... We'll see what happens on this thrust right here. So you got 4 minutes. It's coming into its last highs, which were 1272. But the juice isn't there. So right now, folks, what you have, you're coming into this. Now, this is going to get interesting to see if you get a buyer in there, you know, because right now it's pretty anemic. You know, we're coming into where we came into the downdraft with, oh, that wasn't bad. That's interesting. Okay, so that was only the first. It was 4,800 contracts. We went back up on 3,400, and right now they're only doing 1,700. So, well, you get 4 minutes. Go in there and buy 1,000 contracts, will you?
That'll do it.
That'll do it.
That'll give you the volume you want.
That'll do it, man. So now we do look at it. So this is what you're looking at gold. The next 10 minutes, you want to see a close over 1272. And you're at 1271.30 right now. If you can build some cause right here for a bit, we might have some action. Right now, Not enough juice. Not enough buying power in there. Market-wise, so next week is option expiration too, you know.
Okay.
Third Friday of the month, and this is a not a short month, but because of how the first Friday started. Yeah, yep. So, well, the 20th. Yeah. And then Memorial Day, that's the follow, Memorial Day, yeah, that's the Monday. We get quite a while from Memorial Day.
This is when?
The 30th.
May 30th, okay.
Yeah. But next week, that's gonna put some nice volatility into the market next week, meaning option expiration. Look at it, it's caught a bid. Gold just caught a bid. Let's go take a look at the XAU, the HUI. So the XAU is looking pretty good. This is XAU's up $1.68. You're at 88.17, which is the higher end of the range here. Gold Bugs Index. That's looking good too. That's up $4.28. You stay right there, folks. Our man, Mr. Basil Chapman's going to be coming up next, and of course we're going to have swim lessons. Steve Rhodes, Dave White. I'll be back this afternoon. Thanks, pal.
Thanks, man.
Wow! Go get them, folks. You get the Dow down 63, Nasdaq's up 2, S&Ps are down 450. Stay right there, folks. Basil's coming right up.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.